Hello everyone, welcome to this webinar, Periodic Meetings to Add Value to Your Clients' Businesses. I hope you're having a great day. My name's Peter Towers, I'm the Managing Director of ESS BIZTOOLS. Thank you for joining us. We also have people on Facebook Live feed, so welcome to anyone that's on Facebook Live feed. I hope I can give you an overview of some of our thoughts on how you might go about adding value to your clients' businesses. I've been waiting for you to escape the compliance cubicle. Who would have said that to an accountant? Well, someone did. So let me share some of my thoughts. First of all, though, we're going to look at what the individual had to say. I cannot hang around much longer. Business is getting more competitive by the day. I need your help. Tax does not light me up. This guy was really telling his accountant that he wanted some extra services. Help me run a better business. Why don't you meet with me quarterly and set the meeting agenda 12 months in advance so we're both going to be there? We clearly know we've got that obligation to one another. This is an extract from a letter that was published in Accountants Daily on the 20th of April this year. It was an appeal by a client. I think I would call him a disgruntled client, but who was giving his accountant probably a final chance to be able to offer some value-adding services. How would your firm have responded to that type of letter from one of your clients? I suppose someone around Australia may have recognised the client's name and said, well, I'm his accountant. He's taken to Accountants Daily to publish his request to me. But I think we need to reflect on some very important issues that are contained within that letter from that client for accountants and business advisors. The marketplace is looking for changes. It's happening everywhere. I've been around this industry long enough to have seen a whole range of changes. And I can only suspect that in the next decade, they're going to change a lot faster than what they've done in any previous decade. So how would your firm respond to that type of letter being received in your office from one of your clients? You'll note that he's not complaining about fees. He's not having any complaints other than tax doesn't turn him on. He wants your services as an accountant to help him run a better business. I was a chief financial officer, company secretary in a listed public company, an early part of my career. I can assure you that the day-to-day activities of a CFO don't really give much consideration to income tax matters. You're more worried about some of the issues we're going to touch on today, because that's what the CEO is continually looking for input on. So my suggestion is that you would look at planning for your A-class clients to start with, at least 4 proactive value-adding meetings per annum, business advisory meetings, business improvement meetings every year, and set them into the calendar for the 12-month period so that you're locked in, but also so is your client and both the client's team and your team, because there's going to have to be information prepared to make all this work. And 1 meeting per annum on taxation and compliance matters, because that's probably what you have at present. Talk to your client as if you were the CFO. So it was a CEO-CFO relationship, because I think that's very important. The future services that accountants are going to be able to provide is a virtual CFO service to your clients. And that should be built around periodic meetings. For many of your clients, it probably should be held monthly as a prelude to a board of directors or a board of advice meeting. I think it's an opportune time to be thinking about scaling up. Scaling up's the new term, of course, because there's a lot of formalized preparation work that you can work with your client on to get them into a position where they can grow their business. But it's anyone that's really looking at saying we're currently got a 1 million, 2 million, 3 million turnover, or even higher. And we would like to grow that over the next 3 to 5 years to somewhere around 50, 60, 70, maybe even 100% growth over that period of time. What's going to be needed? One of the big ingredients is going to be cash. Because as you know, as businesses grow, they need more cash resources to fund things like debtors, inventory, work in progress, perhaps a research and development project, perhaps a new factory or warehouse or office. It all costs money. So to make this work, you are going to need to implement a system. What's the cutoff time for sending the agenda items to your client and to anyone else that your client is going to invite to these meetings? They may have a second in charge. It might be their spouse. It might be their solicitor, might also get involved. So a system needs to be developed. And obviously, your team need to know when the cutoff date is for the preparation of reports. If you have any questions whilst we're going through today, can you please type them in, and I will try to answer the questions towards the end of the webinar. If you're watching on Facebook, on the Facebook Live, and you have any questions, can you please type them in to the post to the ESS BIZTOOLS Facebook site, and we will answer them in the next day, tomorrow. These meetings need a formal agenda. This is a formal business meeting. I envisage it's going to last 2 to 4 hours. You need an agenda to keep everyone on track. Send the agenda to your client, get them or her to approve it. And minutes need to be prepared of each meeting, because minutes lead to the action plan, and that's the most important subject, I think. What's the action that's required at the end of this meeting? Now, key items to be discussed. Financial accounts. My recommendation is that they are prepared on all the individual business units that the client might have, not put into one profit and loss account like you would the annual accounts for submission of information to the tax office. Break it down into its components. Have key performance indicators prepared for each of those components. Prepare the report so that it could be handed to the individual manager or team leader at various segments of your client's business, so they get some ownership of their performance. They can see how they're going. They can compare the key performance indicators from one period to another. Show them the comparison to budgets. So that requires the budgets in the first place to having been prepared on an individual business unit basis. So if within a company we have a factory producing products, but there's also a separate store, there's also a retail component, there's also a transport division, And there might be the overall property that's all owned by the business. My suggestion is you dissect them into their separate units and prepare these management accounting reports so that they can be analysed on an individual business unit basis. That will get more involvement of the management team. And I'm sure you'll find that your client, acting as the CEO, will get far more meaningful information from these reports. Remember, this whole process is value adding. This is not compliance work. This is work that the client is voluntarily asking you to prepare. Whereas the compliance work is basically the client knows that they've got to have it prepared because it's part of their income tax obligations. They mightn't like it. They don't see any value add in it. I never had many in my career really thank me for doing a tax return, but I had plenty of thanks for consulting work, a business plan, a succession plan, strategic plans, helping them raise capital. Get plenty of thanks and a few bottles of wine and a few other things because the clients can see value. I think they also need a statement which shows them where did the money go, a simplified source and application of funds. Don't just net things off. And I don't like the recommended way that source and application of funds are prepared at present. Make them very interesting and able to be understood and followed by your client so that he or she clearly understands where the money's gone. The cash flow forecast needs to be updated. Benchmark comparisons are very important, and perhaps by dissecting the business, the company, into its relative operational businesses, you'll get a far better overview of the individual business when it's compared on benchmarks. Revenue analysis. Where did the income come from? What's the average sale? What's the gross profit percentage being earned in various income producing activities that the business is involved in? Excuse me. All of this is very important information if you're going to be having meaningful quarterly meetings. Customer analysis. Who are the customers? What revenue is being generated from them? Profitability analysis on customers in particular industries or even major customers on an individual basis. The technology's there these days to be able to prepare these types of reports. Perhaps if your client's exporting, you could have a P&L done on particular markets. Prospect analysis. How many people have responded to promotional material that's been sent to them in the previous 3 months? What level of sales were generated from those prospects? What changes could be made in the contacting being made to prospects? How good is the company's communications? Things like newsletters, what's the response? Promotions, what's the response? Webinars, what's the response? Facebook, LinkedIn, Twitter, what response is the company or the business getting from these types of activities? Where could improvements be made? Can you get any feedback from customers? Debtors analysis. What's the debtors days outstanding? How does that compare to the budget target? Is there an effective follow-up occurring? Is your debtors days outstanding sitting on 85 days on a 30-day trading terms? What's going to be done about it? Does the client need your assistance to conduct a debtors review to see if the system can be improved? Inventory. What's happening within inventory? What's the stock turn under various stock lines or departments of stock? Is there an investment in stock that is not being sold and therefore it's starting to deteriorate and costing a lot in interest and storage fees? This is the opportunity for your client to also be asking you what I call what if questions. What would happen if we did such and such? What would happen if we changed the production mix as follows? This is really asking you to contribute as a CFO. In my own experience as a CFO, I reckon I spent 3 to 4 hours a day answering what if type questions and going away and then doing the research on particular issues. These questions were generated by the CEO, sometimes by our public company board of directors, but other times by other members of the senior leadership team, which would be basically saying, we'd like to do this, but can we have a costing exercise done on it? Or what's the effect going to be in various foreign currencies? Or can we get a grant for doing this? The what if questions. What happens to them at present? Does your client contact you and say, oh, I woke up at 3 a.m. this morning? Probably think yourself lucky he didn't ring you then. In public companies, the CEOs do. Sometimes, not every day, but sometimes. What is your response? Because I think your clients running any type of business have got what if questions all day, every day. Who do they ask? I think part of the value adding service that you should be proposing to your clients is that you will answer those questions. You will encourage them to contact you. Factor it into the quotation for the services you're going to give them. Make sure they understand they can contact you. Very lonely running businesses. You need to become part of their team. In fact, in the letter that was in the Accountant's Daily, the writer referred to the loneliness of running a business. And he knew that you would be aware of that. You would have empathy for his problem. What's happening with prospects in this business? What more can be done? You might have some suggestions on that. Perhaps a special presentation should be made to them. They could have a Zoom meeting with the client featuring the CEO so that they get some happy feelings about the relationship that they might be going to go into. Work in progress. What's happening in work in progress? A job's been deliberately kept in work in progress because someone doesn't want to have a day of reckoning and bring a job to its conclusion, because then a potential problem in a job is going to be highlighted. I think the creditors' payment, just as you analyse debtors' days outstanding, creditors' days outstanding should be analysed and looked at every quarter. And in particular, which creditors are you not paying in accordance with your negotiated payment terms with those creditors? Because one day they might decide that they don't want your business anymore. What would that do to your client's activities then? The team. A lot of your clients will not have human resources managers or team coaches or whatever other title you want to give to that person who's primarily responsible for assembling the team, making sure that they've been appropriately welcomed and trained, that they understand how the business operates, and then there's ongoing training and professional development activities. Many of your clients will not have that specialised person. Who looks after it? Or has your client got an expectation that you're going to handle that for him or her? If so, this is a very important matter to be discussed. How many resignations have there been in the last quarter? How many new staff? How do those resignations compare to previous quarters? Were exit interviews conducted with the people that left? What did they have to say? What can be gleaned from their statements? Business financing, a very important area. How is your client's arrangements with their bank or finance company proceeding? Are they happy that they've got enough finance? Or are they looking at alternatives such as crowdsourced funding, equity raising, or perhaps raising some capital up to $2 million under Section 708 of the Corporations Act? Or do they want to consider doing an IPO, an initial public offer, and they need to get their house in order? Things like budgets, cash flow forecasts, business plan update, the vision, where's this company want to go? So business financing could be a very interesting area for you to have a good look at with your client. Risk management should be one of the key items on the agenda for each one of these meetings. Activities such as the personal property securities register. What is your client doing about it? Is there an awareness that this register exists and that businesses can protect their assets to a certain extent by registering customers or businesses that are holding your client's assets on the PPSR? I find that there's still a large number of people in business, and unfortunately some accountants, who don't really seem to have a full appreciation of how the PPSR operates. Now, I'll be the first to tell you, I don't think it's very good legislation, but it's the law, and it has been amended significantly over the last couple of years. And another reminder is it's now over 7 years since this legislation first started in January 2012. A very common period for the first lot of agreements that were registered on the PPSR was 7 years. So some of your clients have probably got those registrations that have now expired, and some are probably coming into them now. What's happening about that? If your client is still servicing that customer and that customer was deemed worthy to be registered on the PPSR 6.5 or 7 years ago, shouldn't they now be re-registered? Or has that been forgotten about? So the PPSR, I would suggest you should have a good look at. Insurance reviews are always necessary to make sure appropriate insurance covers have been taken. And whatever other risks that this particular client's got, it's a good idea to go through and prepare a risk items schedule for each of your clients so that you can refer to them and make sure that consideration's being given. How often do you suggest to your clients that you should assist them on reviewing the pricing or the charge out rates that they're implementing? For tradies, how do they work out their charge out rates? Do they just ask one of their mates, one of their competitors, what they're charging? And they say, oh, well, it's good enough for him, it's good enough for me. But their mate might be going broke because he's not charging enough. Or there could be some other benefits. What's the markup they're putting onto the materials? What's their own productivity within their teams? Their mate might be getting 92% productivity, yet your client might only be getting 60% productivity out of basically the same team member. So I'd suggest that at least twice a year and every 3 months, if the client's happy with that, that you review the charge out rates that have been charged by your trades clients. Look at the productivity that's currently being achieved by each individual category of team member. Look at what their costs are, their holidays, their working hours. Review the overhead expenses of the business. Review the markup percentage on materials that your client purchases in to fulfill a job. Look at the profitability target that the client has. And then you can enter all that information into a product package, which we have developed, which will then tell you what the charge out rate should be, taking all those aforesaid facts into account to see how close those charge out rates to the ones that are currently being used. Now, the same exercise can be done for professional services firms, and we have product packages for that, and it can also be utilised for retail businesses to determine whether they've got the right sales mix. And obviously within retail, sales mixes on gross profit rates or markup rates are very important. So there's a lot of work you could do there to try to guide the client. It doesn't have to wait to the end of 12 months. Do it during the year. And out of all this, we're going to have a key action plan. What's got to get done by each person in the organisation? In the next quarter. So what are the 3 key items that have to be implemented in that next quarter? So you might be offering some services already, but perhaps not what we've just been talking about. But why offer this type of service? Could be the question you're asking. The market is changing. I don't think there's any doubt about that. The Accountants Daily published an article a couple of weeks ago, headed "The Resistance Being Shown by Some Clients." This was a query over whether clients were prepared to pay $5,000 for professional services that, as I understood, basically related to an annual set of accounts and a tax return. And the writer of the article suggested that there was some resistance by some clients to paying that sort of fee for a set of annual accounts and tax returns. Now, most clients are aware that there's been a dramatic change in software that's available to assist accountants. In fact, software is now doing some of the work that, when I was a young accountant, was done in accountancy firms. And clients have probably got some expectation for a change in fees. This is where value-added services are so important. This is where I would urge you to be implementing business improvement services for your clients, helping them improve their services so that they can run a better business. It's really what the underlying plea in the letter contained in Accountants Daily on the 20th of April was all about. Help me run a better business. I don't see any value add out of annual accounts and taxation. I know I've got to do it, but sit down and use your knowledge, your experience, your training, and help me run a better business was the real plea that that letter writer was making to his or her accountant. There's no doubt that compliance services are also subject to competitive pressure. Your firm might be outsourcing some of your work to overseas locations, and if you're not, some of your competitors probably are. This has got to be changing what's going on in your locality on pricing and when people compare pricing. And I'm sure you know clients do compare pricing. They go down to the pub and they talk. I had someone ask me at my gym recently what it was going to cost to do annual set of accounts and a tax return for his small business. I said, I don't know. I don't do that anymore. I haven't done that sort of direct work for 20 years. Go and talk to your accountant and sit down and have a conversation. Have you got an accountant? Yes. Have you ever asked them that question? Oh, no, not really. Everything's so quick. I said, well, tell them you want to have an extended meeting, just like you would if you're going to the doctor and you've got something really of concern. You ask for a double appointment and talk to your accountant about it. But my plea to you as viewers of this webinar is, shouldn't you preempt your client getting themselves all worked out about asking you for 10 minutes longer so they can really ask you what other work you can do for them? Why don't you propose it to them now? So I think the opportunity for you is to really offer the CFO services to your clients. Obviously start with your A-class clients, but there's no reason you couldn't extend it to your B-class clients. The meeting might only be an hour for them. Depends. Some of them might be requiring a lot longer because of issues within their business. You're going to have to look at each client and make sure you're identifying some key objectives and clearly marking them off when they're achieved, and making sure your client realizes that that was an objective and now we've achieved it. Just doesn't get forgotten about, because you need to be subtly reminding your client of the contributions you're helping him make or her make to achieving value add within their business. So why not have a conversation with some of your clients about the range of services you can provide? You should be able to provide all the services that we've talked about today. And some of you may well be saying, well, we haven't got the product packages in place. Well, we've got them for you, and I'm going to alert you to some of those shortly. Experiment with the products and services that you can offer. You might find that you can really have a package of services to suit trade businesses, because there's some attractive government grants for tradies, especially if they fit within the key criteria that the government has identified. So there's a growth called the Business Growth Grant, which supplies a grant of up to $20,000 on a 50-50 basis. That's $40,000 worth of work. And business plans and budgets and cash flow forecasts, strategic planning can all be covered by that. So if your client has got a turnover of over $1.5 million, if you're south of the Tropic of Capricorn, or over $750,000 if you're north of the Tropic of Capricorn. I should say the client is south or north of the Tropic of Capricorn. Doesn't matter where the accountant is. They could be securing a grant, which will help the initial financial cost for this work to be done. And once you have been able to prove to the client that you are able to help them on value adding within their business, I'm sure they'll want you to continue each year. But you continually need to be preparing your own scorecard and making sure they realize that. The letter that was published in the Accountant's Daily back in April finished up virtually by saying, broaden my horizons, suggest better systems and practices and processes for me in my business. Broaden my horizons. Use your skill and knowledge, contacts, to help that client run a better business. That's my interpretation of what that particular client wanted to achieve by writing to Accountants Daily. Is your accounting firm going to be able to respond to that challenge? ESS BizTools can assist you For 20 years, we've been producing product packages to assist accountants to offer a broader range of non-compliance services. These days, we call them business improvement services. We want to be able to write material and then run training programs for accountants and business advisors so that you can deal with your clients. So you don't have to spend hundreds of hours in writing the material. We've done that for you. And we're not really worried about the taxation side of things. Some of our articles do cover taxation, but they're written primarily looking at the business operator's point of view on some of the taxation issues. But there's other people who do that very well. And there's other people who will help you to prepare the financial accounts very well. But we honestly believe there's a whole range of other matters, some of which we've discussed today, that all fit within the combined business equation that your clients are trying to run. They're trying to operate. Things like government grants, debtors, capital for their businesses, research and development projects, claiming the R&D rebate, succession planning, are all issues of concern to clients. So why don't you visit our website, www.essbiztools.com.au, where you can find that there's 23 product packages that we've prepared. You can subscribe for the whole package in our gold package, which also includes access to our government grant finding website. Or you can subscribe to individual product packages, if that's what suits you. We produce a newsletter each month, which you badge and send to your clients. And that newsletter concentrates on these types of issues. We attempt to acquaint the readers, which will be the clients of accountancy businesses, with these topical issues that will help them run a better business. And we have other articles from a sales coach, a budget and cash flow forecast software producer, commentary on Fair Work Australia and workplace health and safety, Andrew Geddes commenting on scaling up and bringing in better corporate governance practices to businesses. They're all incorporated within our Business Plus newsletter. So I'd urge you to have a look at one of them. We do have a special on at present. New financial year discount. Finishes on the 31st of August. You will get a 40% discount on our crowdsource funding equity raising product package and off our gold package, which includes everything that is produced by ESS BizTools. I've just checked that we haven't got any questions. I hope that means I've answered everything for you. But if you do have questions subsequent to this presentation today, please send me an email and we will get back to you, peter@essbiztools.com.au. We will be sending the people who are on the live webinar a copy of the PowerPoint slides that we have utilized today. And I would invite you to contact us to get any further information you may require. So thank you very much for being with us today on this webinar. I think this is a very serious subject for accountants to look at, and it's part of the challenge of providing a wider range of professional services that your clients will be happy are going to contribute to their business performance, their business's value. Have a great day. Goodbye.